morning and welcome to the Place Your Trades Network. We're the network that focuses on trading daily options using the CME Group's event contracts. This gives us access to trade the S&P, NASDAQ, Dow, Russell 2000, gold, silver, euro, crude oil, natural gas, and even Bitcoin, which I will tell you, I wasn't interested in Bitcoin. After the run it had, I wasn't crazy about trading it anymore once all the hype died down. But now Bitcoin's getting a little spicy again. So it's a good time to be able to have some low risk access to trading Bitcoin. Today's broadcast is brought to you by Tradeovate. They've created the custom app that we all get to trade these event contracts on. And we're actually going to show you a little bit about how to trade them on the Dome, because that's something that you can do now. And I think it's a game changer for how to trade these. Pax, how's it going?
What's up there, Pony? How are you, sister?
I'm good.
Happy Capital Preservation Friday.
I love Capital Preservation Friday. It's fun because sometimes it's Friday and you're like, ooh, the weekend's here. I want to make money. But Capital Preservation Friday is just like, stay cool, stay calm. If the opportunity's there, make some money. If it's not, it's the weekend. It's like,
take it easy.
Take it easy.
We live to fight another day. That's the whole point.
We do. Look, there's nothing worse than forcing a trade on a Friday, getting your ass handed to you, and then just like taking that energy into the weekend. It's the worst.
That's why I came up with Capital Preservation Friday. I came up with it on the floor when I was still on the trading floor, because if I had a good week, if I had a really good week, I thought maybe felt a little bit sure of myself, a little bit cocky or a little bit arrogant, would take a few extra trades,
Yep.
And then end up blowing a large part of my week, or in some cases my week. If I didn't have a good week, if I struggled, if I lost money, or if I just didn't trade well, or if the market had these really big moves and I missed some of them, then I would try to make up for it on a Friday and again take that trade or those extra trades. I'm not afraid of the market. I'm not afraid of losing money. I'm not afraid of what the market can do to me. I'm afraid of what I can do to myself in these markets. I'm afraid of me. So I need to protect me from me. And the one thing that I'm always on the lookout for is taking that extra trade, that one extra trade that all of a sudden leads to like a downward spiral. Now I'm building negative momentum, and that negative momentum continues to pile upon itself. I was talking to a trader last night, a really, really, really profitable, very, very talented young trader, 33 years old, somebody I'm growing very close to. And, we talked about the difference in my career at 33 and his career at 33, kind of inadvertently. And my point to him is that, I was making huge money when I was 33 years old, just unbelievable amounts of money. But my career was built on a shaky foundation. He's building his career. He's not making as much money as I did, not that we're comparing. But the point in the conversation was that you were crushing it, then yes, but my career was built on a foundation of sand. So when a storm came, everything was going to topple over. He's taking the time and the effort and going through, giving the market his time, not his money. And that's a key phrase. If you guys remember anything from today, remember that. Give the market your time, not your money. He's been building his career on a solid foundation so that when storms come, and storms will come, they come for all of us. No matter how great of a trader we are, no matter how long we've been trading, storms will come. How we act then is going to determine what kind of a soul we have as a trader. Are we going to fight our way out of it? Are we going to slow down and take a breath and kind of let the market come to us and give us those nice and easy trades? Or are we going to cower in the corner and become too afraid to take trades? Are we going to become too aggressive? Are we going to become too gun shy? Or are we going to take it easy and take a breath? And that's what Capital Preservation Friday is. Taking it easy and taking a breath and making sure that whatever trades we take today are going to be nice and easy trades. I don't lose money. I spend money. It's all the same thing, but just the turn of the phrase and the way that I use those words helps affect my mindset. So I don't lose money. I'm not a loser. If I lose money, then I'm chasing it. I'm looking for how I can make it back. I don't make back money. I spend money. I'm willing to spend some money in these markets in order to find the momentum and therefore to start building positive momentum. I always want to be moving forward. In this business, especially, maybe more so than any other, if you are not moving forward every day, you are in fact moving backwards. There is no standing still. Complacency will kill trading careers.
Yeah, and you mentioned earlier, it's really the just one more trade that can mess you up, that can annihilate the progress you made. That statement to me, the just one more, whether it's just one more drink, just one more slice of this, just one more trade. I know for me that can be a very dangerous thing because it's seldom just one more.
Right.
Seldom just one more. I mean, that can create the spiral that, you had a great day. I can't tell you. I think the most demoralizing thing as a trader, when you've had a fantastic green day and you want just one more, because why not? Like, I'm on a streak, I'm killing it, just one more. Let's see how far we can push these limits. And then just one more goes south and I'm like, oh, well, that just one more knocked me down a few $100. Well, let me take just one more and try to get back to how green I was earlier in the day. And sometimes you end up red, and that is the most horrid feeling in the world. It's the worst.
It is. That's a really, really excellent point. An excellent, one more
It's
drink.
not funny, Pax. Not funny.
One more drink, just one more leads to like 14 more, and then you're waking up and you're hungover. You feel bad. I have this one day in my mind where I told because I tweeted out that picture yesterday, me on the floor.
Can we pull that up? I actually have it pulled up because I love it so much, and I think it's like iconic.
It was illegal to take pictures on the trading floor. I couldn't take a picture of myself or, have somebody take a picture of me. You couldn't even use cell phones on the floor. All of the pictures of me that I have were in newspapers or in other forms of media. So that was always kind of cool. And I was a big trader and an active trader, so they keyed on me a lot. Look at that.
How old were you there? That is like, it's just such an epic photo.
35-ish. Let's see.
I can sense the emotion that you're experiencing there. Like, it's an energetic photo.
I'm 45 offer. So this hand signal is 45. So I'm 45 offer, and I've got both hands up, which means that I'm willing to take anything, a big amount. I'm looking to the left of the pit, and I look kind of disgusted. So one of two things are going on in that picture. I'm either short, and people are starting to push the market up, which I think that's the case, because I don't have my if the market was active.
You look stressed.
Always. I'd have my trading cards in my hand like this. So I'd have my hands up like this, but I don't. So I think I was it looks like I'm just holding the market in place. It's 45 offer, and you are not getting it any higher. Because remember, this is when we controlled the market more than the algorithms did. The individual traders, whether you're off the floor at a desk or in the pit. And I was able to move the NASDAQ by myself at various times. Obviously, if the market was rallying, I couldn't push it lower. But if the market was weak, I can push it lower and probe the market. How we all talk about how the algorithms hunt for stops. They go, stop hunting. I know exactly how that is. And I always avoid having my stops run, because I did that. I probe the market for stops. I know how the algorithms are doing that. I know what they're looking for, because that's what I did for a long time.
Right.
I painted the tape. We filled out the chart by doing that, and we probed for stops, and we created momentum in the market that way. So it looks like I'm trying to look like the market is rallying, and I'm trying to hold the market in place so it doesn't get much further above where my average may be.
I just love these photos. Like, you and Anthony, I think, have some of these. It reminds me, there's a subreddit. It's called Old School Cool. Not that this is like black and white old by any means, but it's just like, it feels like a very iconic piece of like history and moment in time.
That's a good point.
I know you've got some stories. I know.
That's history. There'll never be a place. There's no other business in the world, Pony, where middle-class people or lower middle-class people can make the kind of money that we make as traders, or have the potential to make. There it just isn't. The markets don't discriminate. The markets don't care. Trading the markets doesn't matter whether you're white or black or rich or poor or whatever identity we are or have or choose. Doesn't matter whether we're rich or poor. Every single day, every single trade, we have the potential to make our wildest financial dreams come true, and also have the potential to crush our dreams financially. So we have to protect ourselves from that, while leaving ourselves open to all the good things that the markets may have for us.
So there's a quote that Mark Douglas has in one of his books, and that's exactly what he says about trading. It has the ability to make your wildest financial dreams come true. It also has the ability to absolutely crush any form of financial security that you have.
Mm-hmm.
And I really think it's the two extremes that mess us up the most, right? It's going into the day thinking today's going to be the day I hit jackpot.
Oh, good
Today
point.
is going to be the game changer day. Or it's going into the day like I'm willing to risk everything that I have to make this happen, and it could financially crush me. Two very, very big extremes. And trading is emotional. And as much as we try to stay disciplined, and as much as we, you know, some people like to be robotic, which I don't, you know, in a perfect world, but we're human. It's not difficult to get swayed in either direction. So anybody who can sort of stay grounded in the center, that's why I love, you know, compounding gains and the whole concept of little by little becomes a lot. Because when we go into each day trying to make our quote unquote wildest dreams come true, we're setting the expectation very, very high. So if I have a $200 day, I'm going to say, well, that's not my wildest dream come true. Let me keep going until I get there. And in that pursuit, I could end up losing a lot of money, you know? So it's a very fascinating game. And there's a lot of mind tricks that go into this.
That's an incredibly great point. I think the meme stock traders or the people that came in to trade the meme stocks, or even traders that came in to trade Bitcoin, you know, the new generation of traders have that mentality that I've got to bet it all, you know. And again, it's not a game. I don't bet. This is a business, and I've got to conduct myself like I would in any other business. The point, though, is as long as we're looking to be positive every day, sometimes those days are going to wind up being huge. When I started on the screen after I went broke, after MF Global failed in 2011, after I went broke and had to start all over again, my only goal was to be positive at the end of the day. This is on the screens full time, just like when I started on the trading floor, just to be positive at the end of the day. Because I knew if I was positive 200, that would turn into 200,000, you know, or 20,000. And it has, you know, those days have happened. But they happen when the market gives them to you, not when you go out there and force it.
You can't force it. You can't impose your will on the markets.
No,
you can't.
No.
And I firmly believe that when you stack up the small wins, the big ones will find their way in.
They happen.
And they're on days that you don't expect, because it's not, oh, I come in today and I want to make that money. I want to make it every day in a perfect world. But
that's right.
Sometimes the circumstances are there, sometimes they're not. And with that said, I want to talk about what the market's doing right now, because the range that we have been trading in,
miserable.
I think, okay, I call it Satan's chop box. I have a term for it, because every time we're in this range, I'm like, this price action's difficult. What's going on? I forget. And then I go pull up my chart, which allow me to do that. And I'm like, oh, I know why this is difficult, because we've been here before, and every time. So look at this area that I've highlighted in purple. Okay, we've got a cluster of consolidation right there. We've got it right there. We've got it right there. Just take this chart, look where we're trading right now, look to the left. This is not an easy range to trade. And what it does is it really takes the emotion of every perma bull, every perma bear, and it heightens it.
Oh, yeah.
Because this is where the extreme emotions come in. We're going to all-time highs, or we're headed for a limit down day.
Right.
It's a very emotional trading experience, and every single daily stick in this range goes to one side or the other. Like, it's enough to make people think, oh, it's over, we're going down from here. Oh, it's game on, we're going up from here. So it's just a fascinating range. I personally, every time we hit this range, I struggle with it.
Going back to June of 21, when we first, you know, came up, when it was all-time, was it 21? Yeah, June of 21, we were rallying above it. We were making all-time highs above this level. You know, it was a terrible trade then. But then, if memory serves me right, June 18th, we got above 41.87, and we traded up to 43.24. Once we get above 41.87, then the trade gets better, because then we come back to 43.24. It took us, and this is in the summer of 21, it took us like a week and a half. It was July 2nd when we got to 43.24. So 41.87 to 43.24 in just a couple of weeks in the summertime, all-time highs.
Yep.
And then last summer, July 14th, we traded down to 37.23.75. This is all off my memory. 37.23.75 was the low, and then we rallied all the way through these levels I talk about every week. 37.26 to 38.71 to 39.12 to 40.05 to 40.99. 40.99 now, the range between 40.09 and 41.87 sucks. It stinks.
It
And
sucks. Yeah.
and then above 40.99 to 41.87 is even worse. It tightens and there isn't any real momentum. For momentum-based traders like me, it becomes very hard. I don't trade ranges particularly well. I'll make some money, but I'm not gonna kill it. And when I don't kill it, mind games play. Once we get above 41.87, it'll get better again. Every time we get above 41.87, it becomes a better trade. We'll have above 41.87 in the S&P. We will have, if we get above it, we will have clear momentum to the upside to target up to 43.24 again. Through 42.20, 42.65, 42.95. So above 41.87, 42.20 to 24 to be precise, 42.65, 42.65, up to the bigger target of 43.24. Once we get above 43.24, then we'll have a lot of resistance or a big ceiling at 44.09, which is ultimately where I think that the S&P wants to go before it goes
44.09.
44.09, yeah.
Okay, noted.
Now, if we, like Wednesday, this is a great example of what you said of, every stick is, here we go, all-time highs, or here we go.
Yeah, look at that for Wednesday. Everybody thought game over.
So did I was short. I thought, well, this is a great trade from 41.41. That target, the intraday target, 41.41. I even tweeted about it. We're going to 40.99. We stopped at 41.10ish, 41.12, and then turned around and started the rally again. Oh man, scratched out I made money on the trade, scratched out the rest of it, and now it looks like we're going to 43.20,
so
44.09.
1000%. The sentiment from Wednesday to Thursday, polar opposite. And I have to tell you, I took a bit of a brave trade using event contracts yesterday. So this is what I was watching. We had the sentiment of, oh, it's all downhill from here. But I looked and I'm like, technically we're still kind of in a bit of a flag pennant situation. So yesterday, when we started trading above this diagonal line, I was like, you know what? Knowing this range and how it likes to push the limits on the extremes on either side, I took 41.70 yeses for ES on the event contracts. Guess at what price?
I know what price. You told me. We talked about it yesterday. But 41.70, right?
41.70. I took them at $2.13. Okay, I took 20 of them, which is what, like $40, give or take. Look, I manage my risk when I trade, but every now and then I do like a little SPX this, a little bit of, I'm not spending that much on it, but if I get the trade right, the reward is good.
Yeah.
Down to the minute, I thought they might pull the 41.70 and we might not be able to hold it into close. We got it. 20 contracts, $2 a piece, and they ended up closing at $20 each. It was one of the best $40 I've ever spent, right? Because that basically closed out at $400. And that's what this market is capable of. You don't think it's going to happen.
What was the time frame? Like an hour? You did it late in the afternoon, right?
I think I held on to them for
a couple hours.
A couple hours at least, yeah. And look, the way I saw it was like, it's $40. I'm willing to accept, my bias right now is to the upside for the day. We broke this trend line. I know the limits of this range. It looked like we were going to test the high of day yesterday. We were so close. And so I said, you know what? I'm going to take this. If it works out, it works out. If it doesn't, it doesn't. But that's what I love about the event contracts. On days where the market is unpredictable, which is every day, but you also don't want to have too much skin in the game. You don't want to use all the capital in your larger account. You can take a trade like this. And if it works out, great. And if it doesn't, it's okay. It's $40. I'll survive.
Anthony and I have talked about this. The way that I trade is I pay from I call it paying for my trade. So I trade in quarter units. The first quarter is I pay for my trade with just a few points in the S&P, and that means that I remove my risk in the trade. So if I sell a 4 lot, for example, and the market comes down to my first price point to target, my first action area, I'll buy 1. And I'm still short 3. So I have no risk on the trade now because I've paid for my trade. I bought my trade. It's another reason why I love the event contracts, especially with the ability to be able to trade Bitcoin, which is something new for some of us, and or if you're a Bitcoin trader trading the S&P, which is new for some of you, you're able to buy your trade. So yesterday for $40, you bought your trade. You bought the ability to be able to make upwards to, on a 20 lot, basically to anywhere between 200 to, depending on what the market did. If we would have the high of the week, here's something too interesting, technically speaking. The high of the week was 41.77 something, 41.77.75, I think. And we did that on CPI morning. But the high of the trading days, during the day, during regular trading hours, we never made it that high. We only made it up to 41.63. So I look at those highs. I don't look at the Globex highs. I don't look at the all sessions. I only look at the day sessions. So when we get above 41.63, there is no doubt in my mind that we are going to test. Now I look at the Globex highs. Once we get above the regular trading hour highs, there's no doubt in my mind that we are going to test that high. And we did. We traded 41.77 yesterday. So buying those event contracts, buying the trade at 41.70 to me is almost a layup. It's one of those trades where it's, on Capital Preservation Friday, we talk about only taking easy trades. It's one of those trades that becomes easy.
Right.
You've got nothing but upside in it with absolutely no downside. All you're doing is just spending a few bucks to make a bunch, and I think it's a brilliant product that CME has come up with and Tradevate is perfecting through the app and the domes that they're using.
Okay, the dome. We have to talk about the dome because I used to trade them just on the app. And I just found out we can use the dome. Anthony put together like the best layout ever.
I haven't looked at it yet. So this would be my first time of me looking at it. I've traded contracts only on the app too.
I'm going to show you, but I always knew it as a ladder because, when I trade on another broker for my options, I use the ladder. And when he said dome, I'm like, what the heck is a dome? And I looked at it and I was like, oh, I know what, that's a ladder. Like, I know what to do with that.
I only trade on domes.
Yeah.
They're all domes.
I mean, yeah, it's a much different experience than trading on your phone. And like, everything's right there. It's easy to scale in. It's easy to scale out. I like to scale. This is just like a beautiful visual. Before I pull up the dome though, I already did take some trades this morning on event contracts. I'm going to show you which one and why. So basically every morning what I do is I go to our site and I look at the quant stats, which actually let me show you the quant stats. So it's on the on air page and it's the section right here. So if we go to crude right here, if we go to oil, we can see that the probability of opening up, if basically this is a gap strategy, this is what the quant stats look at. If you open above the prior day's close, you're looking at the percentage of closing above the open at end of day. So looking at CL, I like this percentage rate. I like the profit factor. Looking at CL, what was that?
What was crude's close yesterday? It was 80. Close.
It was 82.16. So we have kind of been trading above that this morning. So I went ahead and started scaling into some of the contracts. Let me show you on the dome. Yeah, so I took the 82.50 yeses. So I've just got 7 of them. I'm up $1.25 so far. But again, if these end up closing in the money, each of those contracts will be worth $20. And check out the dome. I mean, how much better is this?
Oh, it's much better. The depth of market, dome stands for depth of market. The domes are Chicago Mercantile Exchange, any trading floor. The walls were nothing but domes. The walls were nothing but price ladders. So, in succession, you got the last traded price to the offers above, and you got the last traded price to the bids below. Bids being where people want to buy them, offers where people want to sell them. On the green side here on the domes, the green number where it says 120, that's where people want to buy them or get long. So it was 10 bid on 120. It's now it's 10 bid on 120 again, with 120 offered at 1075. So you can see the offer is holding in place, and the bid is well, now the bid is coming up and the offers are rising.
Mm-hmm.
So that indicates the possibility of a rising market, of a market that is railing. What is that? That's gold? No, that's crude.
No, it's crude. Yeah.
At 10.5. Okay. Yeah. So, it just makes it very, very easy to be able to see what the momentum of the market is. It was 10 bid on 120. Now it's 10 quarter bid on 120, and 120 offered at 11. Now it's 100. So the market is tightening up. It gives you a really, really good glimpse into what the momentum of that market is.
Yeah. And it's just such a good way. Like, I have all of the different event contracts right here. I can easily pull up a tab for each one. I can look at the strikes. I can see what the prices are. And then really all you have to do, like, I would right click this if I want to trade it, add it into the dome, and I can trade right here. Like, I just love the dome. It's such a better way to trade the event contracts.
Yeah.
So what do you think? What do you think about my trade? It's supported by the quant stats, which essentially, I don't know if you know this, but what they do is they take the historical probabilities of how that market has traded based on the day of the week, the month, and the time frame within that month. And basically, it's really just a gap strategy. If you open above the previous close, this is the percentage possibility that you're going to close above the open, and then vice versa. So I know with this market, we get so many gaps, and it's always like, how do I play the gap? I don't know. This gives me a little bit of an edge that can help me with trading the market. And I think, with event contracts, it's different because what you're doing is all you need to do is nail the close. It doesn't matter if it's 1 tick or 10. It's not like options where your profit is dependent on how far in the money you are.
Another big point. Yeah. It only needs.
All I need is a single point.
One tick above it, and you're in the money. I think that the quant stats are really interesting, and they're for me, they're a tool. They're a good tool. I'm not going to make a trading decision based off of the quant stats. I'm going to be long above the opening range and short below it. Today's opening range in crude is, what was it? I just looked at it. Oh, today's opening range in crude is 82.16 to 82.31. So if I was trading crude, I'd be long at 82.31 or 82.32 up to like 83.30 is going to be the big target. But 82.31, and I would pay for the trade right now, at 82.51. So 20 cents in crude is where I pay for my trades. So now if I'm long 4, I paid for my trade. I'm long 3. I have absolutely no risk. My stop is break even, and I've got a 3 lot on. I cannot possibly lose money. Now is when I would look at the quant stats. After I initiated that trade, after I removed my risk, I'd look at the quant stats and say, okay, the quant stats are supporting this long. So there's other technical information, and there's other, quantitative information that is supporting this position. So I'm looking to take profit at 82.70 or 82.80 and possibly add, because I've got some supporting evidence that the market is going to trade up to 83.30, 83.40.
I think I'm going to add some more. I like this trade. I mean, especially if you look at the level that we need to be trading above. I mean, we're kind of above that resistance essentially right now. So I'll keep an eye on it, see if we can get the momentum going. But looking over here real quick before we get the day started. Yeah, looking at ES, we are opening below yesterday's open. But if we want to talk quant stats again, there is some support here that shows that if ES opens below its prior close, there's still a 58% chance that we're going to close above today's open. So there might be an opportunity here where opening red could still be green at the end of the day. And I'm very eager to see what we do, because PAX, we're in that range. We're in that chop box. What are we going to do today?
Well, today's opening range in the S&P is 41.66 to 41.68.75. So I'm going to be long above 68.75 up to 41.87. If we get below the opening range at 41.66, once I turn around and start trading below 41.66, if I'm short underneath 66, I'll be short down to 41.41. I'll take profit, and I'll still have something left over to see if the market extends. I don't flatten up. So if I buy a 4 lot at 41.68.75, I'll pay for my trade for 4 points, 72.75, and then I'll take profit at 87. above 80, and then I'll still remain long. So I don't know. The one thing I wanted to point out is that we don't fade whatever the market is doing late day Friday. We don't fade it. So if the market turns around and starts to rally, I'm going to stay long, and I'm not going to fade that rally. If the market starts to break and starts to head lower pretty strongly, I'm going to stay short. I'm not going to fade that market. Depending on where we close, I might leave a runner on to see where we open on Sunday night. More than likely, if we close within this range, I'll flatten up and take the money. But if we close above 41.87, I want to be long. I'll stay long. If we close below 40.99, I'll stay short. I want to be short. I'll stay short. But if we close in between that, I'm going to flatten up and take the dough.
Can I show you how my crude trade is going real quick?
Crude is killing it. Yeah.
Why did I trade so modest? I scaled in very, very modestly.
We were trading at 82.51, and I said that the target is 83.30. That's where we're going. 82.
Where we're going.
83.31. 82.31 is the opening range. Above 82.31, I'm long up to 51. I pay for the trade, and then I take profit at 83.30.
Mm-hmm. Well, that's what I like too. So 7 at, let's say $9. What is that? Is it too early for math?
It's always too early for math.
What is that? 63? If I'm wrong, I'm sorry, guys. I'm in California time. It's still early. But if these close in the money, that's essentially going to turn into $140. Yeah. Not a lot of skin in the game, good potential return. And I always like taking out my initial investment. So we'll see where the day goes. PAX, market's open. Time to get going.
Got to get after it. The market around the open has been choppy, but later on in the morning, or even going into the afternoon in this rally anyway, we've had some pretty decent moves. So I'm looking for the market to do something today. It might not do it right now, but it's going to do something. And when it does, I want to be a part of it.
Yeah, I do too. All right. Well, everyone, thank you for tuning in. If you have any questions about trading the event contracts, questions about the dome, feel free to shoot us a message. And if you want to, try this out and trade with us, got the link up on our on-air page. Sign up with Tradeovate, and we actually have the custom setup too that we can share with you for the dome, because I'm telling you, it's an absolute game changer.
Can't wait to download it and look at it.
All right. Good luck today, Pax.
Yes, thank you.
What the market does.
Have a great day. Happy Capital Preservation Friday, and I'll see you next week.
All right. Bye, guys.